Phoenix of the team.
All right, ladies and gentlemen, welcome back. We got another chart talk coming at you during Power Hour, actually. 3:06 on the East Coast, 12:06 out here on the West Coast. Tuesday, November 8th. We got a wild day in the markets. It's one of those days where it's noon and I am exhausted over here. I'm trading like a banshee all morning. And then we had this crazy crypto news come out. So I'll touch on this crypto news very, very briefly. The two top exchanges, FTX and Binance, were kind of going after each other on Twitter. A little game of chicken, I guess. And Binance was saying how it turned out that FTX was actually insolvent, even though they had like billions. They couldn't pay all the withdrawals. They had $1 billion in withdrawals, and they didn't have enough money to pay it. So now they had to quickly liquidate and sell or something along those lines. Again, this is not my expertise at all. This is not. I'm not trying to tell. But what it did, let me bring up the SPY here, so you can see. This is when the news came out here. We've been bidding up since last Thursday, and then that news came out, and we just kind of dropped like flies, and that's based on liquidations and things like that. So now we've bounced back a little bit, and we've got a very newsy week on our hands. I'm just going to bring the SPY daily chart here. So we got the midterm election results coming out. That the elections today, the House and Senate are up for grabs. I think that the market's been pricing in a little bit of a red wave, meaning Republicans are going to take control of the House and the Senate. And what that would do is, that would cause gridlock in the government. And historically, stocks love gridlock because the government's not going to be too hands-on with any policies.
Mm-hmm.
The Obama presidency, he couldn't get much accomplished because he couldn't get anything passed in Congress. But stocks were up hundreds and hundreds of percent during that time because there's no drastic changes. We want hands-off government. That's what stocks want.
Mm-hmm.
So that's what gridlock would entail. So my theory was this week was this up move in the SPY was all based on pricing in that red wave. We'll see. I don't know. I'm not a huge politics guy. I know you're not either. So and then after that Thursday we got the CPI. So I'm just kind of taking day trades here and there in the strongest names. And I'll show you later all the stuff like scalping and things like that. But this is all based on news. To me, this is I'm looking a bit like a bear flag on the daily chart. This Nasdaq, the SPY. We look at the Qs. Very similar. Where they're in a downtrend, and now they're kind of retesting this previous resistance area, and that's where we sold off from. So it wouldn't surprise me we go lower. But again, with how bearish everyone is, it makes me think we move higher, honestly. But I don't know. Well, this is all event risk. I don't have any conviction with this up, which is why I'm taking short-term trades. So rest of the week's action is largely dependent on midterm elections, CPI, whatever those are. We'll talk about those tomorrow, the next day, more in length. But as far as this action goes, it's a ton of great earnings names out there. I'm very surprised and very excited about the reactions of earnings names. So it's funny because I was looking at all this data, like earnings are down. Earnings are actually down in a big way, year over year, looking at previous quarters. But the action we're seeing, like I have 75 charts that are all like gapping up, and these beautiful flags and things like that. So I'm not as focused on the data as much as I am the price action. And there's a lot of charts. This is the most charts I've been excited about, for an earnings season in maybe like 6 or 7 earnings seasons. So it's a long 2 years. So exciting times in that regard. As far as where the market's going, I have not a clue. I'm taking these things day by day, and it's really that simple for me. And you'll see with the trades I'm taking, just short term and things coming out of consolidations. But if you want to share anything, feel free. I don't have much conviction in this area. I don't know what's going to happen. I'm just taking short term trades, the strongest names. That's it. It's simple.
Okay.
And they're working.
Can you Shay, can you see my screen?
Oh yeah, we called the top on energy for the 15th time this year. Let's go.
We are not. We are
the last one was at 120. Now we're at 128.
No, Shay. No, don't say that. I talked about no, do not say that. I did not say that. Again, I was talking about energy retesting the high, and now
oh yeah.
You watched last week's Shark Talk with your knees swiveling around, and nothing about energy topping out, just energy retesting this all-time high, or I'm sorry, 52-week high.
All right, yeah.
And for now,
do you think? I'll bring up a little clip after.
Yeah, please. I can't wait to see. Are you just salty that Humana is breaking out farther than energy is? That you're gonna have to wear a suit one of these days?
Yo, I didn't choose yours. I actually have some great ideas. Exxon. Can you tell me the Exxon chart?
Uh-huh.
You know, that's healthy right there. The way it's riding, its moving average is going higher. That Humana, that needs rest.
Oh
Oh,
shit.
okay. That's what I wanted to talk
Oh
to you about.
shit.
Yes.
Okay.
All right, no,
Actually,
go
yeah.
talk.
Hold on, wait.
I'm getting my clip up. I'm getting my clip up.
Hold on.
Talking
Hold
all
on a
this,
second.
talking all this.
It's honestly, I would say for the two stocks we picked, it's a pretty,
Yo, the craziest
it's
breakouts,
like
right? It's like
pretty, yeah. It's like
I had no stock in this Exxon, and I was like, God damn.
yeah. So you had it through 104, if I am correct, right? Was it through 104?
Well, I didn't buy it. I was just saying,
Okay.
you keep calling top at energy, but it's the strongest sector, and it's the only sector with huge earnings. So it's like, I'm not ready to call it top on it.
All right.
All
So
you
let's,
told me all my life is,
all right. So let's
friend is
see.
your friend.
We'll
So
say you,
stocks get stronger, and
we'll
now you're
just,
Mr. Top Caller all of a sudden.
I'm not
Yeah.
calling, again, if you look at our post per day is me talking about raising the stop energy, not calling the top. So,
Okay.
um,
Bring up that VDE. Can I see that VDE chart?
hold on. But
Can I
so
see that VDE chart?
I mean, I'm
It says
trying to get
take
these,
profits.
I'm trying to get, yeah, if it rolls over, if you look here, defensive, look, 128 defensive stock, take profits. Again, typically into a retest, we should be taking profits. It's just normal, you know. Again, I still think if it goes higher, awesome. I also own BDE. It's the biggest sector that I have. So I want to see it go higher. But in retest, typically we want to take some profit. So for BDE, if it's going to roll under 128, or roll back over under 123 after a 30% run up this month, yeah, I think it would be pretty wise to take some profits after a 30% increase in a month in an entire sector. I think that.
Do you think?
Yeah.
I just got my clip ready. I got my clip ready. Unload the clip.
I know you can't even play right now because it can't. But anyways, percentage wise, I think, let's see. So 500 to, so Humana's up.
You got to be 600. 500 to 600 was 20%. And then Exxon
Yeah.
was 120.
Okay.
Yeah.
All right.
Yeah, you got a long way to go, buddy.
I'm more than halfway there. And let's see where Exxon is.
It's actually, I think, the
Exxon's-
same amount. So it's 3% away in Exxon, right? No, 6% from the
Yeah.
100, which I guess it's like 4 or 5% here.
Uh-huh. It's pretty close. I mean,
Dude, and the
I
Exxon
don't-
earnings were sick.
so I mean, I think the odds of us both picking two stocks that both went on a pretty impressive breakout, I think it's kind of funny in a good way. But anyways, again, I think energy, again, retest chart wise should be defensive. If you're buying energy up here after 30% run up this month, I think you're wildly late to the move. If you're already in it, I guess more for me, defensive stop. I think again, with the broad market, I think with a lot of these sectors, we're seeing more of these bases starting to form. For the SPY macro, we're in this very obvious breakdown stage. Not good. Short term, I will try to use this little red thing here. More of a base starting to form where we will probably trade, in my opinion, underneath this 420, in between this 340, for the rest of the year. But eventually, we probably get a nice breakout up through this 300, probably 400 really, in time. This break of the base, and then we move into that breakout stage as we climb back towards those highs. But these patterns, again, the entire year, the market basically broke down. We could expect probably 6 months, 3 to 6 months, if not longer, of the market basing, maybe trading in this under 420, but above 320 range. And then we kind of work ourselves higher. And again, a lot of these individual sectors, separate from maybe telecom and like the REITs, a lot of their sectors are looking pretty healthy. Like a lot of these bases are forming. We're not really seeing a lot of new lows. We saw a lot of those shakeouts in the beginning of October where we thought a lot of things were heading lower. But I think a lot of these sectors do look pretty healthy. As you mentioned, a lot of the earnings names have been very, other than the mega cap names, like the FANG names, a lot of the earnings have been very good. So other than a few of those little sectors, I think a lot of the action is looking pretty healthy. So that's, again, my little market outlook.
For now, heading into these two major events.
It's definitely way better than being in whatever that exchange is that's basically going to zero today.
Yeah, some crazy stuff. So the Ontario, Canada,
Mhm.
the teacher's pension, they had like 250 million bucks in there. It's like, all
Gone.
zero. Yeah,
Just fine.
literally gone.
All right,
And it's gone.
So all right. So Shake, so we have a couple questions. So
Wait,
Joseph,
whoa, buddy. Whoa, buddy.
you had this thing ready to go.
I knew you were gonna pull this bullshit.
Yeah, okay, let's see.
And it's like Exxon's name is just such a mega cap name.
Because it's a mega cap, it can't go higher, right? Okay.
that we've seen these ones before, and when it hits the most perfect, it's like the time to take profit.
Right. Or it's a momentum bull flag, or it's a momentum bull flag and the strongest name on the board. I don't know.
Yeah.
Okay. And so
But
it's
I'm
like-
saying it's tough to say it's a mega cap name when we saw it go, and it's not going to move. It just
No,
went 88 to 105.
what I'm saying is, my point is that it's done this move already. It's hard to expect this,
That it's hard to expect that right now, which is happening right now.
Exactly, yeah. So
This is
you-
literally what's happening right now.
So your boy
Right.
can't
It's
be
got to
wrong?
drop 50% before it does that, right?
I mean,
there was one of the
no,
other
let's say that. but-
Again, there's a
I got like 3 more minutes if you want it, but my point was,
I mean, I don't know if anyone wants to watch us watching ourselves talk.
nah, that was very, very. I look back at that and I was like, what? That's like your favorite thing, a fucking momentum bull flag and the strongest sector name. Who are you? Who are you?
Have you figured out what I have to do if I lose this bet, if Exxon gets to 120? Because it's
Yeah.
pretty-
Oh, I've got amazing ideas, and I'm gonna probably buy something on the T card that I'll ship it to you. Don't worry, it's gonna be good. I'll
Okay.
look good in a suit. Like, fine, that's fine. You're gonna look ridiculous.
if Exxon gets 120.
I was thinking about the dinosaur costume, but that's played out. So
I have it. It's like I can put that
No,
on.
no. I'm spending money on this. Spending our money on this.
I have a bear suit. You want to put the bear suit on?
No,
Uh,
it's pretty cool. That's
uh,
not gonna be cool.
No, it's not gonna. Okay. All right. So Shake, can we do this question?
Yeah. All right.
All right. So let me find it really quick. Okay. It was, hold on one second. Pulling up Joseph Park's question. Okay. So Mr. Park was wondering, for you, Shake, do you always just risk a fixed percentage amount of your account no matter what? Or does it vary on a case-by-case basis? We'd love to hear more about how you think and go about position sizing at this stage in your career, and has it changed at all from when you started? A couple points in there. So,
That's a good question. Yeah. So, on a broad consensus, when I began trading, everything was the same fixed risk amount. And, since then my game has developed, into where I think something's going to be a longer term swing trade, something's going to be a short term day trade, and I'll size myself accordingly on that. And also, if I really, really love a stock, I'll be a little bigger, but it's still on a percentage basis where it's like normal trade. I'll probably risk either a 1/4%. I'll say a 1/4% or a 0.5%. If it's something I love, I'll risk 1 to 2%. But also I'm factoring in timeframes of when these things are. So, that's where it's a case by case basis. If something's a day trade and I'm giving it to low of day, I'm not going to go crazy with risk. That's where the 1/4% risk comes in.
Mhm.
Or maybe even less, maybe half of that, 1/8%. But the only thing that's changed over the years is I'll be bigger in ideas that I absolutely love, because I can handle taking that loss, the bigger loss, because I did my research. I really like the name. If this doesn't work out, so be it. But when I was starting off trying to find my strategies, trying to find my style, everything was the same fixed risk amount, because I didn't know what was going to work and what wasn't going to work. And then you do it on a percentage basis, then that's how you grow your account without having to think about it. You risk 1%, your account's 100K, that's going to be $1,000. When it's $1 million, that's 10K. And that's just like, you look at your account and you do 1%, it's very simple to do it like that and grow with your account. So yeah, I'd say that I've had a lot of times in my career where I've decided I was going to size up based off nothing, and it didn't really work out that well. It was just, because I wasn't ready for the size. You grow into the size more slowly, but it's not like you wake up one day, okay, I'm ready to double my position size and everything, because you're not ready to handle those gyrations in the P&L.
Yeah.
That's what it comes down to. So
Definitely agree.
I think I answered that one pretty good.
Yeah.
Mostly case by case basis, day trades. Time frame is a big thing into it. If it's a day trade, you want to risk a very little bit because your stops are probably BS. But all in all, you got to grow with your account. Keep it a fixed percentage based on the account.
Yeah. And that's like I know what you're saying, but for someone who's newer, they get lost now, where it's like, okay, it's $1,000 account, 1% is $10, but it's not saying you invest $10 in the stock.
Oh.
It's saying that you invest in this example, the 1,000,
Yeah.
and if you goes down $10, that's when that's like that 1% equivalent. It's some people,
Right. I'm buying much more stock than that. I'm risking, let's say I have 100K in my account. I'm risking 1,000 on the trade. That means I'm going to buy 1,000 shares of a name with a $1 stop. that's how I'm risking $1,000. I'll probably buy $30,000 worth of stock or whatever it is, but I'll be risking, and I'll have my risk quantified with the stop location.
Mhm.
And that's what you always want to do first, entering a trade. Where's my stop? And you want to buy off the stop.
Definitely agree. Definitely agree. I think he hit on all the points that he had asked there for sure. All right, Jake. So the other question, since we're on this risk topic, you had some option trades, and as much as we hate options,
Oh yeah.
you want to touch on that trade and also
Yeah,
maybe
for sure. So I've been getting a lot of questions about this because I started trading market options because it I had a huge flaw in my own personal game, like my trading game. And I was constantly right about these market turns. And my execution was really poor, and I would lose money. For example, this entire run, I was saying to people right here, I was like, if the SPY touches the 200 day, it's time to get like short, because of the way it worked out. And I didn't want to hold huge stock positions because of gaps. I lost 15K shorting the market here.
Mhm.
Isn't that, it's nuts to think about
Yeah.
it. I lost 15K in these 3 or 4 days shorting the market before it dropped. What is that? 20% or so, So what the options do for me, and I was buying some puts based off here. It just expands my time frame, and it allows me to see the position through instead of looking at every tick and being over levered based on trading physical stock. So, when it comes to actual stock trades, I'm still just doing stock. I'm not doing options. The only time I'm doing options is for macro, really, really macro trades. Like I think the SPY does sell off into the end of year. So I have some December puts, but how I effectively work them is I'm trading everything to the long side. I'll be scalping to the long side, and it just, it's protection.
Mhm.
And that way, when we have great names breaking out, like this ACLX was breaking out last week, and we bought it here, and then it made a move up here. Normally I would be taking a lot more of my position off before it made that move to 24 because I'm scared of what the market's going to do.
Mhm.
Because I have that protection in the puts, I can let this position just ride, and I did really well with it. So that told me. And then what I do, I had some November puts, bought them here. I covered into support here, third day down, and I rolled them out, bought some more December puts, and if they work out, I have a risk-free trade in my hand because I went 3-1 on November puts.
Mhm.
And if they work out, that'd be great. If they don't work out, that's fine too, because I'll be making money long all the stocks I'm trading.
Mhm.
So, I'm not, overnight becoming an options trader. It's just,
Yeah.
there are flaws in my personal game that I feel I can improve. So that's where I'm going with
As
options.
as a percentage of your trades overall, what do you think would account for these option trades for this year?
This year. I'd say 99.75% more, maybe 99.8% stock, 0.02%, 0.2% option.
Okay.
I don't do
That's-
it. It's only for macro market trades.
No, only reason I said it is I started to see a couple members like posting
now,
some
yeah.
random option trades, and it's like big win on 20%. I'm like, oh my god! I'm like,
No. So
fucking
at least I
shoot me.
still went 300% on the option. So it's
Yeah.
3-1. It's like you still have to keep that equation in your head. Oh, you lose the camera.
Yeah, it'll come back on in a second. There you go.
There you go. But yeah, so I mean, I'm still keeping the same principles. I'm not trying to make 20% on an option. I'm risking 100% on.
Yeah, that was more. That's the point where it's like you mentioned before, the risk of like you're risking 1% of the account, and that's your loss here, and you can quantify that much more with the equity positions because the liquidity is just there. If you want to trade Apple,
and I've been finding a lot of trouble with the liquidity aspects. You can't
Yeah.
really price as much.
so that was more I want to talk about because I saw a few members and I hit them like privately, like, look, please just stop trading options, especially if you think this is good. If you think making 20% in this stock, in this option trade in the stock is great, it's going to be very costly. And I've seen it so many times of like, you think that's a quick win, but you don't realize when you start to lose, you're realistically losing 50 to 100% because when the thing turns against you, if you're buying a put and the stock's ripping, that option's worth nothing. And it's not coming, like the time decay is just not in your favor. So I've just seen too many people have like one or two or a little lucky streak where they think it's like the easiest thing in the world. And then the market turns or their idea doesn't start to work. And then it's like this just costly endeavor. And it's hard to like just turn it off. It's hard to be like, I'm done with this. I lost. Let me just stop. Where most people, they kind of go back to it. And I just didn't want to have Pandora's box open and everyone now starts to fucking trade options, because, you put on a couple,
Yeah. A couple
put
lucky
options in the
winners.
spot. Yeah. So that's that. I want to just touch on that really quickly, but that was good. That was good. All right. What do we want to go over next? Any top ideas?
Stop the share by accident. Top ideas. I mean, I told you there's a ton of names I'm watching, but I'm not sure they're ready. I know you like this one too.
Mhm.
Regeneron. I was in this one today, but I sold it at highs. Just getting a little fearful of this market, and it ended up being the right decision. And then there's a ton of names setting up like this. I have this earnings. What you see is earnings 2020 Q4. These are
Mhm.
all names that are like looking decent. Look at that
Mhm.
list. It's crazy. It's crazy. So, for example, this PLL is on the list. It's another lithium name, but that one's like beautiful bull flag.
Mhm.
Earnings were all the way back here. You saw the strong earnings move, flagging out for a few months, and now we want to buy this one through 65. There's a ton of names like that. I don't need to go through them all now because the market's back and forth, but
Mhm.
a lot of things like that. I like this. This BTU gave us a nice entry. This is trade of the week. We bought this one on the dip. It was like dipped down below 28 for 5 minutes yesterday, and we bought it nicely. If it came down, retested this 26 area successfully, where the moving averages are, I'd
Mhm.
plan to buy more, honestly. So I think this one is 34, 35, 36 very soon. I like coal stocks. I'm kind of thinking there's going to be a red wave as well. But I got to go through this list. I don't have I'm not ready. Midday.
Yeah. So good. So good.
So what's up? What else you got for us?
All right. So let's see. I had a question. I mean, I didn't have a question for me. One of the members had a question for myself.
Oh, good.
Let's see. All right. So the member asked, for long-term investing, is there any benefit to investing internationally and having exposure outside the United States? I've always just invested in US stocks and buy the S&P, but being from the UK, tend to find myself the odd one out. As most people I speak with invest in UK stocks, I want to get your thoughts on how important having international exposure actually is. Is it worth having any at all? Or am I good just keep going the way I am, buying the S&P for long-term investments? So again, obviously that would be like us saying, like him talking to all his buddies and they all buy UK stocks. That's, again, it's not too surprising. Just like we're only buying US stocks, we're not talking about UK stocks. So it's not too surprising he's kind of the black sheep there, but the US market leads kind of the global economy. Like if the US market's doing good, typically the rest of the countries are going to kind of follow suit for the most part, where the UK economy is probably going to follow the SPY. So if it were me, I don't like the international exposure. I think you just kind of get jammed up. Maybe not the UK, but for example, you bought, there's been advisors pushing Japan for 20 years as like having 5% of portfolio in Japan. In Japan, the EWJ has had nothing for 20 years. It's been like the worst country to buy.
Well, yeah, in the 90s, what was it? Was it inflation? Whatever. I don't know what happened in Japan. I forget what happened in the 90s. The whole market crashed and like investors never came back.
And yeah, it's been like that but it's like, that's what I'm saying with those like particular countries. Again, if you're from the UK, I can understand having some exposure in your own homeland. You're going to know the UK economy better than Shake or myself for that reason. But the US economy or the US market is the market leader globally. And most of the major countries will follow what the US economy or market is doing. So I'd rather just buy the leader. It's like if the US economy is LeBron James and UK is insert the number 2 or number 3 basketball player, or if I could pick LeBron, I'd rather just pick LeBron. So I would just
really poor. It's a really poor analogy when you don't have any second.
I'm sorry, I'm looking at all your sports memorabilia. I got nothing. So you fill the number 2 basketball player. I would keep it simple. I would just buy the SPY especially if it's working for you. Keep it simple. If you want to have a small exposure in your own backyard, probably not the worst thing in the world, but the simpler you keep it, the better it's probably going to be.
I think the reason people predominantly invest in U.S. stocks because it's the strongest economy in the world, and it's been proven, year after year after year after year. So I mean, to me, it's that simple. You want to be in the strongest economy.
Yeah, it's like you're always trying to find like the next best thing, and it's like, or you can just pick what is the best thing and has been for, as you said, a very long time, and it's just, I'd rather buy the U.S. economy than buy crypto or buy anything else. Like it just works.
Yeah.
It might not be the most exciting thing, but I don't want the excitement. I want it to just.
Right.
I don't want-
The Ontario Teachers Pension Fund won the exciting thing.
Yeah,
And
that's
now they lost 250 M's.
yeah. So I mean, it's very unfortunate, and it's unfortunate not more for the teachers because not their decision. It's one
Oh,
idiot.
it's horrible. It's
It's
heartbreaking.
one idiot advisor who was like, I bought Bitcoin at 60 grand and we're going to put all this money here. And now it's gone. So that's more like the advisor whoever made that decision. It sucks, but it's their fault. It sucks for the teacher, but yeah. That was like even say like, you're like, you can slam dunk it about crypto. And it's like, it's when it's up and everyone's think it's the best thing. Like
You're
that's
talking about crypto?
yeah, when you're like in the chat before, you're like, oh, why don't you come in now and like slam dunk from the whatever. And it's like,
Yeah, this is the
people
moment
get-
you've been waiting for 10 years.
No, I mean, I don't want people to lose money. It's just I don't want like our members to go into things and lose money. So it's like if I can avoid that person to do that, but now it's like it's over. It's like it's smoke. So it's like now it's just rubbing salt in the wound. Where when it was high, and it's like sell it, lock in the gain. That's where I'd rather be than rubbing it in someone's face. All right, I think we kind of touched on all of it. It's gonna run out.
Let's wrap this up. We'll check in with everybody next week after we get the CPI and the midterm elections. We got a lot of news coming at the market, so no vast predictions in either way. I think it's that simple to say.
Yeah.
So with that, catch you guys next week.